Shifting focus now, United States President Joe Biden and House Speaker McCarthy pushed forward towards a deal on the U.S. debt ceiling. Both of them are determined to reach a deal soon to raise the federal government's $31.4 trillion debt ceiling and avoid an economically catastrophic default. After a month-long standoff, Joe Biden and McCarthy finally agreed to negotiate directly on a deal. An agreement needs to be passed by both the Congress chambers before the federal government runs out of cash to pay its bill. That could happen as soon as the 1st of June, as many have warned. Biden has come out and said that we are going to come together because there is no other alternative. Now, Republicans, who control the House by a 222 versus 213 majority, have been insisting that since long, Democrats agreed to spending cuts in exchange for a deal to raise Congress's self-imposed debt limit. This limit needs to be lifted regularly because the government spends more than it takes on in taxes. On being asked if the debt ceiling will be done by the administration by the time Joe Biden returns from Asia on Sunday, McCarthy replied that it makes it harder. Listen in.
We had a productive meeting yesterday, and with all four leaders in the Congress. It was civil and respectful, and everyone came to the meeting, I think, in good faith. I'm confident that we'll get the agreement on the budget, that America will not default. And every leader in the room understands the consequences if we fail to pay our bills. And it would be catastrophic for the American economy and the American people if we didn't pay our bills. So we're going to come together because there's no alternative to do the right thing for the country. We have to move on. And to be clear, this negotiation is about the outlines of what the budget will look like. We pay our bills. The nation has never defaulted on its debt, and it never will. And we're going to continue these discussions with congressional leaders in the coming days until we reach an agreement, and I'll have more to say about that on Sunday.
Stocks in the United States rose sharply on Wednesday, fueled by optimism over a potential deal that could be cracked on this debt ceiling. A rebound was also seen in regional bank shares. U.S. President Joe Biden and top House Republican Kevin McCarthy reiterated their determination to strike this deal.
U.S. stocks rose sharply on Wednesday, fueled by optimism over a potential deal on the debt ceiling and a rebound in regional bank shares. The Dow, S&P 500, and the NASDAQ all gained more than 1%, with the NASDAQ the highest at nearly 1.3%. President Joe Biden and top House Republican Kevin McCarthy on Wednesday reiterated their determination to strike a deal soon to raise the $31.4 trillion federal debt ceiling and avoid what would be a catastrophic default. A jump in regional bank shares also lifted sentiment, led by a surge in Western Alliance Bancorp a day after the lender said deposits grew by more than $2 billion in the quarter ended May 12th. The KBW Regional Bank Index notched its biggest one-day percentage gain since January 6, 2021, and the S&P 500 Banks Index surged for its biggest daily percentage gain of the year. But Will Rind, founder and CEO of Granite Shares ETFs, says regional banks aren't out of the woods yet, citing a risk that their deposit bases could still bleed out as customers park their money elsewhere in search of higher returns.
The bigger picture concern, perhaps, for market participants is simply that with interest rates at 5%, investors can get a risk-free 5% or elevated interest rates by putting money directly at the Fed in the form of treasury bills than by putting money on deposit at a regional bank for significantly less than those levels.
Shares of Tesla jumped more than 4% a day after its annual shareholder meeting, during which CEO Elon Musk downplayed market speculation he may step down from the top job. He also touched upon two new mass-market models the company is developing and reaffirmed that deliveries of its long-delayed Cybertruck would start this year. Retailer Target rose more than 2.5%, and TJ Maxx parent TJX companies closed nearly 1% higher. While both forecast current quarter profit below expectations, they both also beat estimates for the first quarter.